welcome back. We continue our coverage of the RBI's monetary policy, and we have a whole host of experts joining in again to help us decode the findings from this policy. Umesh, Revankar, Executive VC, Shriram Finance; Neeraj, Gambhir, Group Executive and Head of Treasury, Markets and Wholesale Banking Products at Axis Bank; Pranjul, Bhandari, Chief India Economist at HSBC; and we also have Ashhish, Vaidya, the MD and Head of Treasury and Markets at DBS Bank of India, India, with us. Gentlemen, Pranjul, thank you very much for your time here. Mr. Revankar, quickly to start with you, we heard more from the governor when it comes to gold loans. He said the idea is not to tighten the norms, the idea is to harmonize the norms, and of course highlighting some of the conduct-related concerns that the Reserve Bank of India has had. Now for Shriram Finance, if you could just tell us, your gold loan portfolio, of course, was about 6,000 odd crores or so, 2.5% of your AUM. What sort of changes are you expecting here, reading from what the governor has said?
No, the way we understand is for past 1 year, RBI has been talking about the gold loan, and the direction has already been given. So I think the direction is already in the. Everyone knows about the direction given by the RBI and is open. I don't really think there is significant. There will be a significant difference in what RBI has been talking for nearly 1 year and the new guidelines. It will be more to support and to encourage gold loan by the formal segment, because if you understand well, there is a large informal segment that has been involved in gold loan financing, and more and more formalizing is only going to help the borrower and to regulate the overall activity. So I think RBI is going to become more supportive of the formal segment, extending the gold loan with the banks and NBFC put together.
And Mr. Revankar, a quick word on the co-lending pact, which has now been extended to all regulated entities, which includes now NBFC to NBFCs and beyond just the priority sector. What sort of partnerships did you already have in space? How much additional credit do you think this could unlock? Because the AUM for co-lending isn't that large for the industry yet. Mr. Revankar?
Yeah. It's to be okay. I thought this was
yes.
No, I believe they're expanding the co-lending arrangement with beyond the PSL, because most of the co-lending arrangements was for acquiring PSL assets, and RBI is trying to expand it beyond the PSL and also other regulated entities to widen and deepen the credit from the bank. That is going to be very helpful. There will be more meaningful participation from all the regulated entities in deepening the credit.
All right. Well, Pranjul, your quick takeaways from the policy along expected lines, that 25 basis point cut and shift in stance. What is your base case? How many more rate cuts do you expect to see through the course of this cycle?
Yeah, thank you very much. So, look, I must say that this is as dovish as it can possibly get. Markets had so many expectations going into this policy: rate cut, liquidity assurance, stance change, forecast cuts. That I was actually getting nervous this morning, but it seems like the RBI has delivered on all of those fronts. I think what really stood out for me was the assurance that came, with some of the policy actions. In the presser, he spoke about this 1% NDTL liquidity that will be there. I think that's sort of an important assurance that the market was looking for. And when you think about rates, I think the assurance came from the fact that they've not just reduced forecasts, they've also said that the stance has changed to accommodative, and also said that this stance change is actually applicable only to rates and not to liquidity, which means that liquidity easing will not substitute rate cuts. So you will see both running parallelly, liquidity easing and also rate cuts. So given all of this and a very clear dovish bent, my sense is that, we're going to see 2 more rate cuts. I have one in June and the other in August. And that takes the policy rate to 5.5%, which is my forecast of neutral repo rate at this point of time. And then you recalibrate then. If summer monsoons and all of that have gone well, if growth is still very weak, maybe you can dip below neutral, but that's not my central forecast right now. My central forecast is 2 more rate cuts, taking the repo rate to 5.5%.
All right. And Neeraj, Gambhir, what is your sense? You think the rates could dip below neutral, or is that not a very likely scenario?
No, I think given the forward-looking view that RBI has given on inflation, that we're probably close to 4% for this year on average basis, and certain quarters we're going to be below 4. I think it's fair to estimate that we'll have a policy rate settle down at somewhere close to 5.5% over the next 6 odd months or so. Provided a whole host of other things play out. I mean, there is a lot of uncertainty in the global environment, so we need to be mindful of that. But yes, I think 5.5% as the terminal repo rate for now is what seems like a kind of a fair assessment. I also feel that there is a lot that the Reserve Bank has done in terms of liquidity provision over the last month or so. Our statement has always been that we need a lot more on the liquidity side than on the rate side for the rates to be transmitted in the system. So far, there has not been much of a transmission because we were in the last month of the quarter. March usually is very tight. Now we are beginning to see some impact on the bulk deposit rates, on the money market rates. And I think with the clarity that the governor has given today on the forward-looking view of the policy by way of changing the policy stance, I think is also going to be very, very important for the markets in terms of transmitting these rates. So I feel that now the entire real rates in the economy will start adjusting towards the policy rate, or taking cue from the policy rate will start adjusting there. So I think that's where I see the impact of this policy.
And, quickly, Neeraj, just to follow up, even on the deposit front, you think now with the lending rates coming down, there is some headroom there for banks to readjust?
So it's very interesting that over the last 3 or 4 years, the bank's balance sheets have changed structurally. A large part of the balance sheet is now linked to external benchmark, which is repo in most of the bank's case. So it basically means that roughly 50% of your asset side reprices very, very quickly after the policy rate is changed. But the liability side, usually takes time to reprice. So banks obviously would want to have a faster repricing of the liability side. And as the signaling from the Reserve Bank and the liquidity provision from the Reserve Bank becomes very consistent and efficient, it's easier for the banks to do that. So I would expect, therefore, now the transmission to happen on the deposit rate side as well, both on the wholesale side as well as on the retail side. It could be a matter of a few weeks or maybe a month or so when you see a significant impact of this on the deposit side. Remember, policy rate has been cut by 50 basis points effectively now, but we haven't seen any change in the retail deposit rates. So I think there is a lot that needs to be done.
Yes, and that is a space we'll closely watch. Ashhish, quickly, what were the hits and misses for you, and what are your expectations on the terminal rates?
So I think policy clearly on the expected lines and more or less in tune with what's globally happening in terms of demand supply dynamics. On a very broad basis, I would think that the way you should look at tariffs is a tax on consumption. So that basically means that the consumption, or the biggest consumer in the world, is actually going to cut down on consumption, which basically means structurally we are looking at lower consumption, and accordingly accompanied by a lower rate scenario across the world, where most of the central banks will actually pivot towards lower rates. I also have a thinking that while positive real rates and all the discussions that happen around it is in a phenomenal growth scenario, I think in a consumption starved scenario, we will somewhere in the world pivot towards neutral to a negative real rate scenario to manage the growth inflation dynamics. My sense would be obviously in the initial phase, like Pranjul mentioned, about 5.5. But I think that the overall scenario that is emerging for me is that the growth is going to take a massive hit across the world, and we are going to pivot towards a much lower sort of terminal rate. And I think likewise, I think the entire fixed income space will do quite okay and quite well over the next few quarters and years.
Okay. I guess bankers will be very happy. Thank you very much, gentlemen and Ritu, for continuing this conversation. I caught only the last part of it. But for me, one of the big takeaways from the press conference was the governor more or less admitting that their ballpark revenue, ballpark liquidity surplus is 1% of NDTL. Neeraj, was the reading right? And does that give some sense of, security and confidence? How would you react to it?
No, this has been, I think, from the banking system and broader market, this has been a constant feedback to Reserve Bank that transmission does require surplus liquidity in the system, and the surplus liquidity has to be meaningful. Now, whether it's 1% of NDTL or 2% of NDTL, it's a matter of debate. But I think their acknowledgement of the fact that you need to now shift the system into surplus liquidity. Actually, the system was in surplus liquidity, overall durable liquidity. It moved into deficit on account of the FX intervention and related, effects. And now they have brought it back into surplus in some senses. I think we need to have this surplus sustained for a meaningful period of time to make sure that the transmission happens, to make sure that the bank deposit rates, come off, and associated, impact on the lending rate also happens. So I think that acknowledgement is certainly very, in some senses, assuring for the market.
Okay, now what difference does it make to you? Today, I thought the big takeaway from the press conference was, I will keep 2 lakh crore surplus. Did you get that feeling? And how will that change your behavior?
So there is a perceptible change in banks' behavior in terms of pricing of their liabilities, depending upon whether the banks on any given day are lenders to the Reserve Bank versus borrowers from the Reserve Bank. And it has been an experience over the last, I would say, 20, 30 years in this country that if you make the banking system surplus, i.e. banks are on a daily basis lending to the Reserve Bank instead of borrowing from Reserve Bank, the reprice of the liabilities happens much faster. The reprice on the asset side also happens much faster. So I think it's a function of how fast behaviorally how the transmission happens in the system, whether you're in surplus or in deficit. It is an established thing now. So I think Reserve Bank is acknowledging that. And I think if they do it, then we will see banks willing to cut rates on the deposit side and pass that off onto the asset side as well.
Okay, same question to you, Ashhish. I thought he gave away that we will keep 2 lakh crore surplus or 1% of NDTL. What difference will that make to you?
No, absolutely. So I think the past few months' action of RBI in terms of the decisive way where they brought in liquidity and the fact that he has reiterated that even now, I think is a very clear indication. And like Neeraj mentioned, right, when you want to transmit the rate lower, you keep the system in surplus liquidity. And given the dynamics of most of the assets being priced off the repo rate, I think the transmission this time is going to be quite faster. Like he mentioned, last time it was about 6 to 9 months. I think this time it's going to be far quicker. And hence, I think everywhere it's going to become much more clearer. And the bankers will have a lot of confidence to reduce the deposit rates.
Pranjul, any takeaway in terms of whether they will reduce the growth even further and the therefore the natural real rate goes below 5.5? I think you were answering that to Ritu.
Yeah, so look, my sense is that this is not the last we are seeing of the GDP cut. If you look, it's only a 20 basis points GDP forecast cut they've done from 6.7 to 6.5% for FY26. If you look at the MPR, even for global growth, they've only brought it down from 3.2% to 3%. I think across the world, forecasters will be bringing down their growth forecast even more. And my sense is that in the next couple of meetings, once we know what are the tariff rates that are going to stick, my sense is RBI will actually lower its growth forecast for not just FY26, but also FY27. So from that perspective, yes, this is not the last word on growth. Even on inflation, I think the numbers obviously were heartening that they cut the growth forecast, but what was more heartening was the qualitative statement because, for the first time in many years, RBI saying that inflation is durably aligning with target of 4%. And they also said we are seeing a durable decline in food inflation. This durable decline is a word that was sort of not coming by for last many years. So I think from both, further growth forecast cuts, inflation qualitative assessment, my sense is that it's a very, very dovish policy at this point of time. But if your question is if they're going to cut a lot more, look, we already discussed this. I think they can cut twice more in June and August, taking the repo rate to 5.5, which is my estimate of neutral repo rate. And then at that point, you assess. If you think that growth is actually very weak, then of course you can dip below neutral. But that's not my central forecast right now. But I would say the risk is that they will cut even below 5.5%.
Okay, the risk is. Okay, that seemed to be my takeaway as well. Mr. Revankar, my only question to you is, with this, co-lending liberalized both in terms of entities and products, are you seeing a whole new world open out for you?
No, definitely yes, in the sense, but see, it will be very gradual. I don't think there will be a host of activity happening because co-lending is in the vogue for last 4 to 5 years, and the speeding up of co-lending has happened gradually. So I think it will happen gradually, and definitely it will help more entities to get access to banks' credit, and that will help to deepen the credit into the various segments which are not covered right now. So it was mostly focused on PSL targets by the bank. I think it will get expanded. That's a good news. I think many of the smaller NBFCs now can be assured, and also the other entities can be assured of bank line of credit.
Okay, over to you, Ritu.
Well, broadly, I think that was the takeaway even from the Reserve Bank of India governor on co-lending and gold loans. Perhaps the markets overreacted a bit. The idea is more harmonization and rationalization. But quick word, Mr. Revankar, going ahead, life gets better, your borrowing rates come down?
Definitely, yes. The transmission is yet to happen for the first 25 basis point cut. I think normally it takes 3 to 6 months to happen. And I think as we are looking forward for further cut, I think it will happen over the period. And we're happy if there is a 25 to 50 basis point cut so that we can pass on that benefit to the customers. And ultimately, the borrowers, especially middle class family borrowers who buy real estate property or to vehicles, they normally look at the interest rate because interest rate makes a decision for them. Their decision making depends upon the rate. And I think once that happens, I think there will be more demand for other goods because home is the first demand that creates a demand. Then other things will follow. So I think that's where I believe as the rate reduces, the more borrowing or more credit offtake will happen, and that should help to grow the credit.
Okay. Just a final question, Neeraj. When is the first deposit rate cut coming?
I'm hoping as soon as, yeah, of course. I'm hoping as soon as banks.
No, hope is not a data point. I mean, what is your
Well, I guess pretty soon. I would say pretty soon. In fact, if you ask me, the deposit rate cutting cycle has already started because we have seen in the bulk deposit market, the rates come down by approximately 50-60 basis points. I think the issue is that when banks find the confidence to do the retail deposit cuts.
Okay. All right, we'll have to leave it at that. I think the governor will be very happy to hear that. Ritu and our guests, thank you very much indeed for joining us and helping us understand the monetary policy better. It's a policy that seems to tick all the expectation boxes of the market in terms of rate cuts, stands, and from the press conference, an assurance of 1% of NDTL as liquidity, which means about 2 lakh crore of liquidity surplus was more or less assured. The more he spoke about it, the more it seemed that that's a given. On the gold loans, we should know shortly, but it does look like it may not be very penalizing. The word used was they are rationalizing rules. They didn't necessarily say they are tightening. So we will have to wait and hope. Thank you very much for joining us in this special broadcast on the monetary policy coming to you from the Reserve Bank of India headquarters. After a break, it will be back to news. Business Lunch will take the action forward.